The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Well, everyone, of course, Larry is not here. He's just starting at this moment. There's still time for you to sign up. His all-day webinar should be really exciting. This is a really good day to do it. Quite volatile already. So, Larry Pesavento, busy all day in the all-day workshop that he's doing, or webinar. Very exciting. And Basil Chapman sitting in here. Usually I do the noontime show, the Tiger Technicians Hour, and my daily service is called the opening call, my daily newsletter. In the Chapman Wave methodology, let me just go through this very quickly. We look for the most identifiable lowest low, nearly count each successively higher peak, alphabetize them, uppercase on the way up, lowercase on the way down. It can go to 7 higher peaks, A, B, C, D, E, F, G. There is no H, it goes to a G, and then you have to look at a recycle, but it's at D, the 4th highest peak, that other things can happen. Just keep it as simple as possible. And then I look at just basically an arch pattern, a cup pattern, a straight line pattern, and then the combination comes down, makes an arch formation, tests the left side low. If it takes it out, I've got it red because that's negative. And on the upside, it's a reverse Y pattern. And you go to the upside, you stall at a peak D, E, or F to come down. And then what you do is you see the retest, and if it breaks to the upside, that's very positive. So make it as simple as possible. 4 higher peaks from an identifiable low gives you a buy signal to buy mode. Target is a peak D, number 1. Only looking at 3 patterns, straight line down or up, arch formation, cup formation, and then a mix. So just keeping it simple. What do we see here in the 2-minute E-mini chart, trading down at down 850 at 2960? This is the June contract. You went to that D, stalled, broke out, and what I like very much is the cup formation, not the cup and handle, but the cup. It's called the Chapman Wave cup and ladle. It breaks out and should take you to at least a D. This went to peak C1, and instead of just going 1/4, 25 cents higher, it's stalled right at a double top that's called peak C1, C2. It acts like a D, pulls back. What does it hold? It holds the 200-period exponential moving average. Then it starts a brand new move and it goes up, and it extends that peak C1, C2, because very often that can still go to a D. What does it do? It goes to a D and an E, pulls back. And what did you get? That's the 2-minute chart. You got the 5-minute chart, went to a peak D, taking a breather. And the hint is that there's a peak C in the 10-minute chart. That should technically go to a D, but it has fulfilled a whole bunch of the criteria. There's this big bowl or cup formation. Left side price time match went to the high in a shorter period of time. That's usually positive. The MACD has the moving average convergence, divergence is strong. Stochastic's fading a little bit. It's a little weaker, but it's still at 84%. I like it over 80%. Every textbook and technical analysis says over 80% is called overbought. Under 20% is called oversold. I say absolutely, this is completely the wrong thinking. Over 80% is what you want to see because it sustains the price move to the upside. Under 20% is not what you want to see unless you're short, because it holds the price down. Let's get to the nitty-gritties here, and we'll do this in Chapman Wave methodology in the bigger context. The YM, the Dow futures, trading down 75 at 24,444. We need to see the futures push above this peak that was made right here on the 30th of April, peak E, I'm calling it for now, at 24,792. But that's not the issue. It's got to not just go high, it's got to test this. Look at this 200-period moving average, the pink line. Do you need it? No. Remember, each one of us here, the hosts at TFNN, we have our own technical, we've been at this, I was talking to Larry yesterday, we've been at this a long time. Between the two of us, we must have analyzed in our own way, using our own methodology, Easy 1 million charts, easy. All right. And that's from the 1 minute to the 2 minute to the whatever it is. To the monthly chart on the right. What did I say, peak D? This is what the peak D looks like. Look at this Dow. Look at this. This is the cash. The Dow cash goes to where? Goes to peak D, week of the 14th of February at 29,568. Look at that plunge down to from 29,568 to 18,213, a 39% decline. I mean, that's big. And then what do? We see a really good rally, and that monthly chart went to what? A peak D. So that can be quite potent. And that's where you've got to be a little careful. So in this case, we've got the rising wedge formation, narrowing wedge formation, and what I'd say to subscribe to my opening call, let's anticipate there's going to be like a cup formation. How it takes out that left side low high is it's so important. We've also made, I haven't heard anyone talk about this, we made an island reversal in the cash index. That's really tough to do. In other words, here's the body of land. There's this little gap down, 2-3 bars, and then a gap up. So you've created this island, and it says at any point, if you come back down and you take out the high of 23,708 that was made on the 13th of May, be careful, because you're going to be doing a lot of retesting of that whole area. But meantime, this is good. For 2 sessions, you're above that. All we need to see in my work is a push in the next 2-3 days above 24,000, not 708, not 24,764. I want to see the 24,800s hit, and then we're looking at something very different. But if we stall here, this consolidation, and if you think about it, we've been in a consolidation since the mid-April. Yes, we've gone higher, but yes, we've gone lower. And if you think of this as a median point right here in the middle, around about 23,900 in the Dow, kind of that's where we are. Hey, wait a minute. Let's just have a look at this. Well, let's look at the we looked at the E-mini. Look at the QQQ, the index 100, trading down to 16 cents at 231.23. I love to draw these patterns. It's so easy. You take the highs, you put in a green line just underneath it, about a 16th, a little more than a 16th. You put in a red line, and that says, I call that the Chapman wave. Look at this, right there, inside track repellent zone. Look how many times the price has been repelled. But wait a minute. Look at this red line, this narrowing wedge. That is a really good at well, it's moving because every day it's rising. But let's say right at this moment, you've got 220 as key support, break under that, go to 219, and you're looking at a consolidation finally in the QQQs. But wait a minute, you've still got this whole area of the Chapman wave, inside track, propellant, buy zone. So that says, and I'm doing it day by day, 220, below 222 into the 220 area, that's your containment area. Look at the V-shaped pattern. This is the weekly, 237.47, all-time high, week of February the 21st. That's a little bit of a pullback, just 30%, goes down to where? The 200-period moving average. Now, Larry always makes a joke about this, about the moving averages, and he always says if you cross the 200 with the 60, well, believe me, if you have a technique and you just keep using it over and over, it becomes very important. And that's the most important thing. That's what he's going to be teaching today, a technique that he's used over and over and over and over successfully. And that's what you want. And look how successful this 200-period moving average right here in the week of the 27th of March.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Larry Pesavento is hosting a special event Thursday, May 21st from 9 a.m. until 4 p.m. Eastern Time. Trade What You See, a live trading event. For the first time in over 10 years, Larry will host a live event where you'll watch over his shoulder as he trades the markets live. You'll see how he organizes his trading day, the times most likely to generate a signal, what outside information he ignores, and more importantly, what he does not ignore, and much more. Larry will trade the markets in real time, including the Euro US dollar, pound dollar, dollar yen, the Dow, and E-mini S&P, crude oil, gold, treasury bonds, wheat, and soybeans, and more. When you sign up, you get a month of his daily newsletter, Fibonacci 24/7 included. For all the details on Larry Pesavento's live trading event on Thursday, May 21st, and to sign up today, visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks, we're back. Basil Chapman sitting for Larry Pesavento. I'm the host of the Tiger Technicians Hour at noon every day, Eastern Time, that is, and the author of the Opening Call Daily Newsletter. So just let me show you here on the left, I've got Chapman Wave automated support and resistance lines in the 2-minute chart. Look, 29.61.97. This is not geared to the futures. This is just geared to the index. And that was resistance, and yep, it was resistance. And now you've got this whole 29.59, 29.58.75 area as key support. Let's see, that's the 2-minute chart, and the 29.62 area is the resistance in the 5-minute chart. Let's see how that works out. Remember, I'm talking about patterns, so you can see you've got this lowercase h pattern here. This one, little one here, was not successful. It went underneath. My rule of thumb is you've got 2 bars in which to get back in above the left side low, and it did that. And now it's trying to establish some kind of a base so that it doesn't make the arch completely negative going down to the 29.58 level or 29.61.25. And if it does that and it's able to get to 29.63.50 in the next few minutes, the cup formation, there's always 2 fighting patterns. In this case, it's the arch and the cup. And we'll see which one wins. At this particular point, the MACD is quite good, but is negative, but it's above where it was before, and the stochastic surrounding in the blue line, the on-balance volume, is quite strong. And you can see that in the 5-minute chart, the MACD is still very strong, and the price is still way above. The green line is way above the black line. Moving averages, though, that is key. And I'm going to show you this exact thing right here. Look at this. In the daily chart, if there is a pop, pop's not good enough, actually. There has to be in the next today's Thursday, by Monday afternoon, Tuesday morning, if the Qs are able to even touch 236, that's going to be absolutely spectacular action. If it stalls around here, you can go sideways. You've got tremendous support, as I've said, between 224 and 222. But look at the V-shaped pattern. It took just 1, 2, 3, 4, 5, 6 weeks to plunge from 237 to 164. It's taken a lot longer to go higher, 1, 2, 3, 4, 5, 6, 7, 8 bars. But on the way down, you had a trough B. In other words, you made a little ictus right there, and then you went straight down to a B, and then turned around. So those were leg A and the leg B, and then turned around for trough B, right on the 200-period moving average. And look what's happened. You're only in leg B to the upside now. This is spectacular action. If you read the papers, if you listen to the politicians, if you listen to those rambling multi-hour political commentaries about the norovirus, what everyone was doing, etc., there's no way you would have even put your foot into the stock market, let alone press a button to buy. But if you're looking at the chart, you've got to admit that if you were in the NASDAQ, the QQQs, going into March the 21st, that high, and you went away, you were just out, instead of being out of commission because you didn't leave your house, you didn't even have the internet. You were just there and you didn't know what was going on. And yesterday or this morning, you were ho hum. You wake up and you say, oh, look at that, 231. Oh, darn, I'm down 6 points. Oh, yeah? If you had woken up on March the 23rd, you would have been down 30%. You're looking at it now and you say, not bad. So it depends where you are. Look at the IWM, the Russell 2000. This is the small cap stocks, the Russell 2000. Look where that is. I didn't work it out. 170 down to 95. Whoa. So it's a 60-something point decline. That is big. So it depends where you are. Look, it hasn't even come back. It's almost made it hasn't quite come back at 50%. Let me just do this here. Yeah, it's had a really nice rally, but this is nothing compared to the Qs, nothing compared to the S&P or even the Dow, which is lagging a little bit the others. And look, it's holding quite well. It's down 31 cents pre-market at 133.69. It's just stuck in this range. It needs to get not only over this leg C, this peak C of 136.685 to start a leg D. It hasn't even hit the 144.30 level of the 200-period moving average. So it's lagging. So over the next 4 weeks, 5 weeks, 6 weeks, if at some point the NASDAQ suddenly actually takes on a breather after we've had some spectacular gains in stocks like Amazon, Facebook, etc., will the Russell 2000 pick it up? Will we have a rotational correction, in other words, or will everything come back down together? Two things are absolutely really important right now. One is that to be short in a market that can have a coronavirus, some kind of some kind of vaccine, some antidote announced, you're vulnerable to within seconds. Look what happened here when there was just and I think it was another mention of one. You were down here in the E-mini. You were down at 29.52. Within 5 minutes, it was at 29.63. And now look, it's making, you remember I said the fighting pattern? I love the arch formation. Look at this. Here's the arch formation, having a nice comeback, only down 4.75. And we're about to begin the day, the regular day. That's at 9:30. I mean, look, yeah, we're getting that leg C. What did I say? We're missing a leg C, a D. We should get that leg D in a moment in the E-mini 10-minute chart. So this is saying that you might want to be short the market or out the market, but the bias is like a cork in water. You push it down, you let go, whoops, it comes back to the top of the surface. And that's like this market right now. There is fear of being wrong. And if you're just holding your positions, there's a good chance that they can come back quite nicely. Not a guarantee, but a good chance. All right, so I did that. Let's look at gold. Gold right now is down 13 at 1738. Remember, there's the cup formation, but within that, there's something that I call the rectangle formation. And how did that move? That should have been there, and that should have been there. This is my left side, right side price time match. So we're in a range. And you can see it in this weekly chart. Let me show you. This is the daily, this is the weekly, this is the monthly. That monthly has had a spectacular move to where? To a peak D. Well, if there's no new recovery high, it's a leg D for now. If all of next week there isn't a high above the continuous contract, 1788.8, we're going to make a peak D, but look how well it's held for the bar after that. And I had drawn this in a long time ago to say, look, there's a lowercase h that can go to a lowercase m. We got the h that went to the m. It successfully held the low that was made back in December of 2015, and then it broke out. And the rule of thumb with this pattern is it becomes an arch, or in this case, a big bowl formation, if it takes out decisively the arch high. Well, did it? Sure it did. And went to peak C right there, and now it's in a leg D, and it'll be a peak D if there's no new recovery high all of May in the candle. All right. So we've got a high-level consolidation. Look at silver. SI. Silver had a really nice breakout, beautiful peak D, pullback, a cup formation, A, B, C. Where are we now? We're in leg D. Where are we in the weekly chart? A V-shaped pattern, done very well, and it turns this 200-period moving average into, at 1733, a very good support. When we get back, we'll go straight into the market. It'll have opened, and that'll be exciting. Larry Pesavento doing his all-day webinar. I'm sitting in Basil Chapman. We'll be right back.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Little Mozart overture there to start us off for the day, the real trading day. Dow's down 43, S&P's down 3. This is going to be a really interesting session. I just wanted to show you on the silver chart. So one of the patterns that I love is called the Chapman Wave Cup and Ladle. I do not like the cup and handle. Yeah, it works, but you've got to time it precisely because it always comes back to for the handle. The cup and ladle says before you get to a D, you snap above the previous high, which is usually D, E, or F. In this case, it's that the daily high in silver of 14 on the 14th of April at 1643, pulls back, makes the cup formation. And then what does it do? It breaks out peak A, peak B, peak C, and leg D, soars above that previous D, and that says that you've now got very good support at that breakout level. In this case, it's even better because it's the 200-period moving average of 16.60, and it's in leg D, and the MACD is strong. Stochastic, I love over 80%. I just adore over 90%. And when you get to the 93, 95% area, and flat, you can stay. That's what you want to see, because that means that every single decline is going to go to a higher high, or at least you've got tremendous support. So this is really good for silver. Now, wait a minute. This is the weekly chart of silver. You've got chap wave falling axe formation. What does that imply? You've got a left side series of resistance levels that go as a trend line up. It hits a D, E, or F, and then it starts to make, let me just have some water. Aha. Lower highs and much lower lows, which it did. Now you can see this trend line here. Let me just make it a little bit lighter, and I want to make it right there. So this one, I'm going to transparency just so that it doesn't get in the way. You made a peak B minus, and you plummeted down from the 18s, 19 actually, down to 12, and now you're up at 17.84. This is going to be resistance. And then what I like to do is I take this. These are so easy to do. All of you have trend lines on your toolbox or your whatever platform you have. So you just grab it like this. You put that in there. That's your resistance area. It's called the Chapman Wave Inside Track Repellent Resistance Zone. And I usually make that red, the lower one red, this one green, and it just says very quickly, hey, you break above, you close above 18.70 in the silver weekly chart, immediately you can test the left side high of 19.128. You break that, and then you go to the next left side high of 1975. And at that point, you can even start thinking about Chapman Wave 1-to-1 to the upside. We don't have to talk about that right now, but would be very exciting. Right now, this is your repellent zone. Silver's had a spectacular move. Now it should take a little bit of a breather. The upside might be limited, but it's got tremendous support at the in the low 17s, maybe to 1680. Got that out of the way. Let's look at the dollar. The dollar right now is in this. Now, remember what I like to look at, these arch formations or the cup formations. Look what happened here on the left side. Right here. This is the dollar trading down 1.01. And what we're looking at here is it ran to a peak B to 102.99 the 20th of March. Then it pulls back and it makes a lowercase h. And the rule of thumb is if a lowercase h doesn't immediately turn around, form a base, and then break above the left side arch decisively to make a cup formation, it can turn into a second lowercase h, which means you've gone from an h to a lowercase m, and that can repeat. And it's on this third one that key things that happen. What happens sometimes is that on the third arch, it takes out an important left side low. In this case, it'll be this low in the continuous in the dollar index of the 1st of May of 98.65. If it does that, then you've got to look for the next support level, where 98.57 is the 200-period moving average. But most importantly, if at any point in the next 2 weeks it takes out closes under 98.27, let's call it 98. A close below 98 says the dollar has now created a tremendous resistance level in the 99s. But if it doesn't even do that, and it makes another arch formation, and at any point in the next 4 weeks, the whole of June, 5 weeks, the whole of June, it suddenly takes out not this left side high of 100.56 on the 14th of May, but it takes out this doji candle high of the 6th of April. The dollar is done with its consolidation. It's working its way all the way to the 103s. And that's the way I like to look at it. Keep it as simple as possible. What are we looking at? In the next couple of weeks, under 98, very negative. Above 101, very nice. Simple. Otherwise, the dollar is just continuing its sideways action. EUR, USD, euro-dollar currency pair. What are we doing? The left side arch cup formation has become a lowercase u that goes to a double U, to a third U. And this should be called not a W, but a triple U. So it's at a triple U, and it might take out the upside. It has. No, it hasn't. The high of the 1st of May, 1.10180, 101.083. Oh my, let me just do that again. These numbers get me. Oh, it's made a new recovery high. So this is a leg C, right? And at the same time, it's going towards the 1.1024 area, the 200-period moving average. That means that it could have a chance to get, this is key, because if it breaks above the high of 1.11468 in the euro, those numbers will kill me, above the 27th of March high, that's going to be a big breakout to the upside. I think it's just stuck. The rectangle formation lasts a lot longer than your patience. How do you measure that? A rectangle formation can last a lot longer than your patience. Look at that. Hey, wait a minute. What about what we're looking at, Boeing? Look at this. A rectangle formation can last a lot longer than your patience. It's up today, and that's helping the Dow. It's up 6.5 at 139.80, but it's still stuck in this range. So there are a couple of things we're looking at. Let me just do this quickly. W, wheat, very strong leg A. You see, I love to draw these lines. It's so easy to do. You don't have to talk about whether it's a good technique or a bad technique. It's just a technique. So here you are. This line here is, I'm changing it a little bit. I'm making this red, and I'm making this one that I'm just about to do right now to the outside level of this particular spike high. I'm a little bit liberal here on this one because I'm going to that high. That high there just to create a rally, resistance level. If it takes that out and it's right at the border, if I'll make it as simple as possible, the continuous contract of wheat is trading at up 7.25 at 521. If it's able to close, it can't just spike and then pull back. If it's able to close above 525, especially the high that was made on the 11th of May, the 516 at 528 round number, if it's able to close above that, immediately that 530 200-period exponential moving average, 200-period moving average becomes a target. Right now, the stochastic's gone from 5% or so to 29%. That's really good, or maybe it was a little bit better than that. The unbalanced volume is turned up. The MACD has finally crossed positive for the very first time. The 0% line is now positive. This is very good, and it's saying that the 9-period and 14-period moving average of 513 and 510, very important support. I'm hoping that I can turn around and see that the Dow has moved higher. I just want to do this. I won't go into the break. Sorry, Al, I won't do that. Look, we're stuck in a range here in soybeans, and the continuous corn is just peak A, peak B, peak C, peak D. There we are. We've got to watch that closely. I'll be right back. Untitled Chapter.
Larry Pesavento is hosting a special event Thursday, May 21st from 9 a.m. until 4 p.m. Eastern Time. Trade What You See, a live trading event. For the first time in over 10 years, Larry will host a live event where you'll watch over his shoulder as he trades the markets live. You'll see how he organizes his trading day, the times most likely to generate a signal, what outside information he ignores, and more importantly, what he does not ignore, and much more. Larry will trade the markets in real time, including the Euro US dollar, pound dollar, dollar yen, the Dow, and E-mini S&P, crude oil, gold, treasury bonds, wheat, and soybeans, and more. When you sign up, you get a month of his daily newsletter, Fibonacci 24/7 included. For all the details on Larry Pesavento's live trading event on Thursday, May 21st, and to sign up today, visit the front page of TFNN.com.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Hi, folks. Basil Chapman, sitting for Larry Pesavento, and I'm thrilled to say that although Larry's doing, I'm sure, a fantastic workshop right at this very moment, we were fortunate enough to see some of my work pan out. Remember, I said leg D should occur in the 10-minute chart. We've got not just a leg D, but I didn't even have a chance to draw this in. But there is a left side, right side cup formation that's going right to the high that was made in the 10-minute chart, E-mini, at 1810. That was 10. That was let's see. That was at 6:10 yesterday in the evening. Of 29.73.50, and we're trading right now at 29.71.50. So look at that. That is just, I love that. In a leg D. Wow. That's real lifetime, and that's thrilling to see. The other thing that we're looking at here is that the 5-minute chart, look at that MACD, how strong it is. Look at the stochastic at 93%. Remember I was talking about these two moving averages that are still very positive? And now look at this, is only a leg C in the 2-minute chart. Oh, very exciting. Good. All right, enough of that. Let's get to, so the question I had was about crude oil, USO. I just wanted to show you, even though it's just the tiniest little trough to a peak A, B, C, and then to a D in the corn contract, it is a D. This is very disappointing to go all the way from a starting point to a peak D, and you've gone so, the distance is just, it's taken so much MACD effort and stochastic. That's really not a good sign. That just says corn is kind of stuck for now. I'm going to go back and just put this in, and then I'm going to go to question I had from Paul was about the USO. Okay, so this is stuck in the range, hasn't even got to the upper part of the first peak that was made back in April, around about 3:30. Okay, so that's corn. I wanted to go to crude oil. So look, crude oil has gone to that leg D. Hey, is there something here that's a theme that you can pick up? Yep, it's those Ds. Look at this leg D, and it went in a left side, right side price time match, but I had to choose a particular bar for the midpoint. It's gone right to the level that was the resistance before. That was the 3rd of April at 34.79. Where are we right now? We're at 34.46. The high was 34.66. This is the continuous contract. So USO, it's a little difficult to see because it's so tiny. But let me just do this. Let me make this. I'll open it up. There. Okay. So from the low, I can, now it's easy. I just put in the up arrow because I know that it's gone higher into a buy mode, just visually. So it's gone peak A right there. I'll give you the numbers in a minute. Peak B, peak C, peak D, and now it's in leg E to the upside. And what is it doing? It is filling in this whole area that was the gap down back in April before it went to that, remember the contract went to minus 37, unbelievable. So we've got USO, which is the United States Oil Fund, making a low right here of 1688 on the 28th of April, and now it's in 26. And it's tackling the left side gap down high of the 21st of 2720. So if my rule of thumb is this, although we're looking at excuse me, not a stock, but we are looking at a commodity, they always have gaps. But I am going to treat this gap from the low that was made on the 20th of 2960, this is a continuous contract, to the high that was made of 2720 as very important. So it says that if any point in the next week and a half, let's make it 2 weeks, going to the first full week of June, if we are looking at price going into this bar with a low of 2960 and a high of 3240, not only will that be very bullish, it'll suggest that you've now turned this candle right here, the body of the candle of 2352 to 20, into major support for crude oil. If it takes that out, that's going to be very negative, but that should be a really good cushion. If you're able to get about a point higher, is it more than a point? Yeah, it's a little bit more than a point higher. So I like this. So all I can say is that if you're in the USO and you're long, I would say this is very good action. The MACD is very strong. The stochastics at 95%. Remember, I love 93 to 97% and flat. Not just popping up and then coming down like it did right there. You see the weekly chart back in December, January? If you go only 4 sessions above 80% and then you come back down under it, that's really not a good sign. So I love this. I like it very much. What I am going to say is just to look at the 120-minute chart for a second. Will I get enough information? I certainly will. Do I have time for this? Let me just do this. I'll do it visually. A, B, C, D. It goes to an E, pulls back, holds that. It goes to A, B, C, D. Recycle. This is going to be a C. Yes, I like this very much. And I'll just say to you, 25.15 to 24.61. That's your key shorter-term support. Shorter-term meaning in the next few days. That's your support. Looking out a week, the 24 to 23.50 area is support that needs to hold. So I hope that helps you. Next question I had is where did we go to? Oh, yeah, okay. I'll get that, the VIX index. So let's get out of this for a second here. The volatility index. Let me just show this here. This is the TVIX. This is the 2 times. This is the very speculative VIX index trading tool. This is the one that went to 1,000 back on March, if I can find it, March the 18th. There it is. March the 18th. It's 1,000.00 round number high. To get to that 1,000, you had to have the whole world collapsing, which in fact we know that it was. To get back, even at 148 right now, down $1.45, to get back even to the, let's just make it this high here of the 21st of April, where there was more bad news. That high was 317. We would have to get some kind of a reactivation of the coronavirus numbers in a big city like Manhattan, like New York. Certainly the major city of Manhattan, and certainly here in the Boston area. That can happen, but at this particular point, it is really important to continue to think that a chunk of what the worst-case scenario was expected has not happened, and that we're in a much more benign area. Don't tell that to the people who have got lost loved ones. I know there's no benign when you're talking about deaths, but I am talking numbers, and statistically, what we've seen, although I'm personally involved with, my wife's a physician, so I hear constantly. I hear the Zoom calls and meetings. I can tell you that for those people that are in the hospitals under these conditions, it is worse than worse. It is terrifying. But at the same time, you've got millions and millions of people that should be not prone to any connection to the disease at all. And that is a positive. I think that's what the market might be looking at. Dow's up 45, S&P's up 0.73. I'll be right back. Basil Chapman sitting in for Larry Pesavento.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So this is where we have to look at it very carefully. The E-mini 2-minute chart went to a peak C. What I would have done right here is I would have been looking to see, did I miss 2 parallel high bars? Because everything about the on-balance volume right there said, watch out, you're about to pull back. And I might have made that a phantom peak D. But look what happened. The 5-minute chart went to that peak E and pulled back, and you got your big sharp pullback in the 10-minute chart at peak D. So this is just an intraday, tiny little thing. This is a 2-minute, 5-minute, and 10-minute chart. The day is young. This could repair in a short while. But most importantly, what I want you to say, as we're about to wrap up here, I'll be doing more, of course, in my show at noon. So if you're interested in what I'm doing, I didn't even get to a whole chunk of things that I wanted to talk about, Amazon, etc. But in the meantime, I think we're getting overbought. Shorter term, I think we're getting close in the Qs. I think there's just a lot of evidence that says we're getting ready for another consolidation. I'll talk more about this particular aspect if I can do this right now. Oh, I don't think I'll be able to. If I can talk about this, my dark cloud cover, no, this is not the chart. I want to talk about how the market responds to bad news. I did a webinar called the Chapman Wave. Let me see if I can find it right here. There it is. So this is called the Dark News Cloud Cover. This one also happens to have automated Chapman Wave resistance and support levels. I'll talk about that later, but you can see the Dark News Cloud Cover back in February into early March. We got, certainly the market responded very negatively. But the market also does technical things. Look at the dark cloud news cover on the 18th when we saw the volatility VIX go to 1,000, the volatility index. 23rd, we made the low. There was no more than, that bad news was just intense. But look at the rally we've had in the Dow, over a 50% rally. This is really good action. But you can see I put in dark news cloud cover in gray because I think we're just about to enter where a couple of bad news events could actually start to roil the market. It doesn't mean you have to smash to the downside, but I am thinking we're getting to a point where we're starting to see a lot of resistance on the upside. And that's what I'll talk more about in my show coming up at noon. Thank you so much for being here. And I'm sitting for Larry Pesavento, Basil Chapman, signing off. Hope to see you.